Hello everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified. So what are we going to talk about? Well, I want to get into the one pattern. I know I kind of teased about this last week and we didn't have enough time to really get into it. But I want to talk about if you only had to trade one pattern, if you're brand new to trading or if you're lost your way, and I'll explain that in a lot more detail when we get to it, what would be the one pattern to either start with or come back to? And that's, again, going to make a lot of sense in just a few minutes. I also want to follow up on the methodology in action, some continued great examples with the mystery charts, and some of them worked, and as you'll see, some of them just flat out did not. And this provided us with quite a few lessons, and we'll get into that in just 1 second. Housekeeping, I do take requests, as I've been saying ad nauseum lately, due to the time constraints of this particular program. What I've been doing is covering a lot of those requests in my weekly Dave Landry's The Week in Chart show, which is a little bit more open-ended and open formatted. So if you do have some requests, you can send them to davelandry.com/contact. Put your information in, and I will get back with you, I promise. If you want the slides from this presentation, every other presentation that I've done here at Trading Simplified, go to davelandry.com/StockCharts. I'll also give you all three of my books, which will explain a lot of the concepts that we're going to talk about today and in prior shows. And there's a bunch of other stuff that'll keep you busy for a while, including a link to a page where I have all of these stock charts, Trading Simplified videos. All right, let's talk about the mystery charts and the methodology in action. Again, we have some good lessons this week. So let's follow up on a recent mystery chart first. Now, recently I talked about positioning for greatness. And you really have to position yourself where your losses are within reason, relatively small. And ideally, I don't want to lose more than 2% per position. I don't want to lose anything on a position, but worst case, hopefully I only lose 2%. And if things really work out, I have the potential to make many, 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 many times that amount. And the way we position ourselves for greatness is we take a swing trade profit and then we hold on to a piece via a loosening, an ever loosening or widening, if you want to look at it that way, trailing stop. And the reason we do this is pure short-term trading doesn't make enough, and longer-term trading is too hard to predict, and your drawdowns are really abysmal with the longer-term trading. Now, I don't want to get into too much of that, but you're probably going to be right about 28% of the time, if that much, with the longer term trends. And you're going to be much more accurate, and I can't give you an exact number, but much more accurate than 28% with your shorter term trading. Unfortunately, you just don't make enough, and bad stuff still can happen. So it kind of leaves you with a dilemma, and I like to trade for both short term and longer term gains. And this is how we do it. CRSR, recent mystery chart, came public, had a really nice run up, and then had a deep retracement. It's kind of hard to see on this chart, but if you look at the actual numbers, it was at 20-something and retraced all the way back to 18. Quite a few days of the pullback, but that's okay. With IPs, I'm a little bit more lenient. So I call it an FDR. This is where you have one, again, that runs up sharply and then has a sharp retrace to it. They get a little bit ahead of themselves, and then they knock out everybody on that deep retrace, and then they take off and make the real move out. Not all the time, but quite often, this would be a great pattern to trade. So here's the parameters. As you can see, entry of 20, stop at 17, IPT of 23, risk of $3 a share. If you figure out your entry and your stop, then the rest of that is calculated automatically via the spreadsheet. And guess what? You'll get a copy of the spreadsheet if you go to that aforementioned link. So let's take a look at what this looks like on the chart. Entry here, stop down here, initial profit target up here. And let's take a look at what happened. First day it triggered, and not a whole lot. It came right back in. In fact, on that day, I actually got in a little bit higher than the entry because I was trying to apply a little bit of discretion. But luckily, I did get in. Unfortunately, I did get in on this position. By the way, these mystery charts, nearly all of them, with a few exceptions of those that come from the Facebook group. First of all, they were all mentioned ahead of time, either in my trading service or in the Facebook group. And most of them come directly out of my trading service, warts and all. Sometimes it works, sometimes it doesn't. But anyway, in this particular case, we did bang out that initial profit target, so our stop goes up to break even, and then we actually moved it a little bit higher than that. And now the goal is to hold on, again, via that ever widening protective stop. And by widening, a lot of times we just do nothing. So it's at 24.67. Let's say tomorrow it closes at 25. We might just leave the stop where it is, and that stop widens out that 30, 40 cents or whatever that is. Now here's another example of a first retracement. This stock really took off and then had a really, really sharp retrace. And I was pretty excited about this one. And there's all your parameters there. 26, 18, 34, entry, protective stop, initial profit target respectively for a risk of 8 points. Now, 8 points sounds like a lot, but this is a volatile stock, and that's what it called for. So that's why we're using such a wide stop. Entries here, stop is down here. And I know I'm going through these kind of quickly, but if you go in and watch the archives of these presentations, again, I'll give you a link, as mentioned earlier. In the money management portion, I cover a lot more detail. I also have a money management module behind the firewall on my website for the gold membership. Anyway, initial profit target way up here at 34. And if we extend our stop out, and then let's see what happened. We triggered, and then the position begins to fail miserably. Gave us a little bit of hope on a few days, up $2 or $3 here and there. But then unfortunately came right back in and came dangerously close to that protective stop. Now, if you notice, we had about a day and a half, depends on how you count, or 2 days if you want to look at it that way, where we were in the black on this and feeling pretty good about the trade, at least making a little money. And then if you extend that entry out, everything below the entry obviously is in the red. So for all intents and purposes, this position has failed miserably. So the question is, why not just bail out when it starts to fail, especially after several days in the trade? Well, the reason comes in my big mistake I made a few weeks back and actually admitted. By the way, that's one litmus test for your YouTube guru. See if he actually, in his bragging about how great he is, occasionally shows you some of his botched trades. And they probably don't, because they never make mistakes, right? So the Beaky trade, which I've kind of beaten a dead horse on, and every time I talk about it, it's very painful, believe me. We talked about the fact that I hit the initial profit target on, and it came right back in. It was getting pretty close to stopping me out at a loss in the remainder position, or I should say a scratch in the remainder position. I figured, well, you know, I can make $1 and change on this. I think it was like $1.43. Why not at least put a little money in your account and then go on and find another stock? Well, the reason is you never know when they're going to take off again, and this one unfortunately took off without me. Could have been possibly maybe one of the biggest winners of the year. So I busted the plan, and at the peak just a couple of days ago, I gave up $2,500 per 100 shares. And that was all left on the table. So that's a little frustrating, especially now since, I'm going to admit defeat. I actually am in a drawdown. I've been in a drawdown for quite a while. And that just comes with the territory. As I often say, as a trend follower, you spend a lot of your time less wealthy because you're giving up profits and you're waiting for that next big winner to come along, and you occasionally get knocked out of a few trades. But this one trade across multiple accounts would have made a pretty big difference in trying to annihilate that drawdown. But unfortunately, that small gain really didn't do me a whole lot of good. Now, let's go back to the DPHC, which is now called RIDE. It turns out bailing would have been the thing to do. So again, we entered this stock, and then it did stop out today. And you could see this thing, again, pretty much not long after the entry, just kind of imploded. It sucked. And again, you know, mother, father, it stopped out, and of course, I dropped an F-bomb. So, should I have bailed before the stop was officially hit? The answer is no. You want to follow the plan, okay? I just showed you the Beaky trade, which I've really beat myself up on quite a bit, but I'm hoping that it causes enough pain so I don't make that same mistake again. And I'll have the mother of all examples and say, hey, look, guys, this thing didn't work out at first, but it didn't hit the stop, so I didn't bust the plan. All right, I've got a couple of mystery charts for you this week. First one, you can see nice, sharp uptrend followed by a pullback. And it's kind of TKO-ish in the pullback. And go in and watch the show we did on TKOs for a little bit more on that. Sometimes you get a pullback and it has kind of these wide range bars down, which is good. It helps to knock out the nervous Nellies. And you can see entry is up here around 10, stop around 7, or exactly at 7. So 10 minus 7 is 3. Add that to 10. IPT is up here around 13. This one has not triggered yet. I'm recording this on Tuesday, the 27th of October. So we'll just follow up on it and see what happens in future shows. We have another first deep retracement in this one. It's also an IPO and a nice pullback here. We're looking to get in above this pivot high. And this is both of these stocks, by the way, are on the trading service for today. Stop down here, initial profit target up here. Now, the market has been a little iffy as of late, so waiting for an entry has kept us out of quite a few bad positions as of late, as opposed to just jumping in and not waiting for that trigger. Now, if you want to see most of the former mystery charts and the methodology in action, you go to davelandry.com/archives. The reason I say most is some of these do come straight from the Facebook group, and you have to be a gold member of davelandry.com to access the Facebook group, which is pretty cheap if I say so myself. Now, one thing I've been doing lately, if you've been following along with my weekend charts, is I've been talking a lot about these trading problems that have been submitted. I've got a silly little ad where I superimposed my face onto a wizard, and I say in the banner, if I could solve one of your trading problems, what would it be? And to my amazement, virtually all of these problems can be solved with something very simple. And they all can be boiled down to a methodology problem, a money management problem, or a mind, also known as trading psychology type of problem. And one thing I've been thinking about lately is if you don't know what your methodology is, then how can you know if you're doing it wrong? If you could define your methodology, I've yet to find someone that I can't help make better. Not that I'm the grand poobah, but it's very easy from the outside looking in to see what someone is doing wrong. And to my surprise, I would say 99.9% of all people know what they're doing wrong, and this is a speech I often give when it comes to trading psychology. And if they don't know what they're doing wrong and they show me their trades, usually I can figure out what they're doing wrong. And then when I call them up to tell them, they're like, I know. But again, you're going to need a methodology. And a lot of these problems that have been submitted to me, and go in and watch the aforementioned presentations I talked about, but you'll see that often the solution is a simple one. I didn't say it was easy, but I said often the solution is simple. And again, mind, money management, and methodology. And in some cases, you could tell people are winging it a little bit and haven't really cemented a methodology. Now, one thing I would encourage these people to do is to find one pattern and stick to it. If you're not successful with one pattern, believe me, you won't be successful with 10. Linda Raschke, as I often say, once said that all you need is one pattern to be successful. And I've put that into many presentations, and I truly believe that. Years ago, I knew a trader, and he would do really well. And then when he started kind of losing a little money here and there, and to no fault of his own, but he had a lot of different patterns he was trading, he would come back to one particular pattern until he started becoming consistently profitable again, and then expanded out. Now you're probably thinking, well, Dave, tell us that pattern. Well, this one thing that he was doing no longer works, but the point is, find something simple if you lost your way and come back to it. Or if you're new to trading, then figure out one pattern, something that's fairly easy to recognize, something that you can get better and better and improve upon, and then follow that one pattern. Now, through working with StockCharts and developing my plugin for the ACP, by the way, my plugin is free, absolutely free. All you have to do is like this video. That's all I ask. And then you get the plugin for free. And if you don't like the plugin, then go have no fun somewhere else. I'm half kidding. Now, as far as methodology, again, you have to have one. And I would say something really simple like Landry light pullbacks will suffice. Now, let's talk about the rules for Landry light pullbacks, and they're really quite simple. Number one, you want trend to be at least 10 days of 30-day EMA Landry light. And that just simply means the lows have been greater than EMA for at least 10 days. 30 EMA, and we set the parameters at 10 down here for the baseline. So anything 10 or above means that the market could be trending, okay? We're still going to look at the market itself to make sure it is trending. So I like to eyeball stocks in other markets, and again, to make sure they're trending and make sure that trend is accelerating and not decelerating. And for that, I use trend qualifiers such as wide range bars in the direction of the trend, gaps, laps, and things like that. I also pay a lot of attention to the net price move to make sure that the move higher has been significant. Now, when we get to the live charts in 1 second, you'll see the importance of further qualifying that trend by eyeballing it in addition to the Landry light. Now, the next thing is the stock must pull back and kiss the 30-day EMA. So the Landry light goes from wherever it was, however many days, in this case, probably about 80, and then it goes back down to 0 when it kisses the EMA. Remember, this just counts the number of days the stock is above, the lows are above at least, the moving average. Now, once we identify a stock we want to trade, we want to apply proper money and position management. That means we're going to use a slightly liberal entry above the market to avoid being triggered on noise alone. We're going to use a liberal stop below the market to avoid being stopped out on noise alone. And the goal is to squeeze out at least a swing trade without getting stopped out. And then we're going to set the initial profit target as the entry plus the risk, or the entry minus the stop. Now, I've spent a lot of time talking about this in the money management shows we've done in the past. So go in and watch those. And if you have the time and want to invest a little bit, go in and take the money management module on my website. So this is what an actual setup looks like. You can see in this particular case, we have more than 10 days of Landry light. We have quite a bit. And you can see the lows for that entire period above the 30 EMA. Stock pulls back. And once it touches that EMA, it goes back down to 0. Get a little kiss of the exponential moving average. Entry's up here, nice and liberal. Stop is down here. And if we know those two things, the initial profit target is up here. So let's go treasure hunting. Let's see if we could find some setups to trade using the ACP plugin and using a little scan I wrote. Now, before we do that, here's a picture of my tool cart. And some people online, when I posted this, said it was messy. This is actually clean. But anyway, the point I want to make here is it has a lot of tools on it. Each tool has a different purpose. And obviously, you don't want to use a screwdriver as a hammer or a hammer as a screwdriver. And there's a reason why there's so many different tools. Each one has one advantage over the other depending on the situation. So I use a lot of different tools in my analysis. And the good thing is the good people over at StockCharts.com have been very accommodating and taking what I've been doing with all these different packages and working it into StockCharts. And this is pretty cool. And this is where the scans come into play. And there's a few other things that I've put in requests for. So I think it's just going to get better and better with time. So let's take a look at my scan and let's go treasure hunting. Now here's the scan I wrote. I wanted to write something very simple just to identify the first day that a stock crossed below its EMA, in other words, kiss the EMA, after 10 days of Landry lights. Now, of course, you can take the scan and tweak it to your liking. Don't worry about copying all this down. If you requested the slides, I'll give you a copy of the scans. Now, let's pop over to ACP and take a look at the results. So here's my Landry light indicator at the bottom, and I'm using a 30 EMA with 10 as the baseline. And the very bottom, and I have it squished up because I just want to see the number of the reading. I'm not really worried about whether volatility is increasing or decreasing, but I have volatility, and this is just historical volatility down here. And all of this is part of the plugin. And I have a 30 EMA plotted on the chart. So this is the results from the scan. Now, I put in a request this morning, and maybe when the scanning is up and running in ACP, we'll have this capability. But what I like to do is I like to sort what I find by volatility, and that tends to show me the better setups. It's going to be very hard to beat the market with stocks that are the same volatility as the market itself or lower. You want stocks that can move a lot more and a lot faster than the overall market. Now, since I wasn't able to sort by historical volatility, and again, hopefully that's coming soon, I just sorted by the scooter rankings, and I'm not sure exactly what the scooter rankings do or how they work, but in playing around with this, I noticed that the cream did sort of rise to the top. So that's something that you might want to experiment with until we can get this volatility up and running as far as for sorting purposes. So anyway, we'll take a look at this list, and the first one on the list, TWST, doesn't look too bad. As you can see, it's had a nice trend higher, okay, and pullback. Notice that this trend is well above this prior trend in here. So that would be one that you probably want to put on your watch list. Now, Square's a little bit different story. It looks pretty good if you look at it right here. But if you look at it a little bit longer term, you can see that it's kind of going sideways for quite a while. So just eyeballing a chart, I would immediately toss this one out. You might put it in a momentum list just in case the momentum comes back. But for now, I would leave that one alone. UPS, kind of the same thing. Not a whole lot of excitement there. In fact, if you look at the HV down here, down at 22, what was the Square? Square is up here at 48, and then TWST, which is the best looking one so far, HV is about 60 on that one, or 59 actually. So as we go through these, you can see another example of sort of sideways movement at best. I remember when I first was working with programming early in my career. I have a degree in computer science, by the way. I have an MBA, which is pretty much worthless for trading, but it looks good on a wall. But anyway, when I was doing some programming, working with a trader, I programmed his patterns, and I said, well, here's one of your patterns. And he said, no, it's not. And I said, yes, it is. And we went back and forth a few times, and finally I said, look, you said so many days and then a pullback or whatever. And I pointed it out to him, and he says, well, I don't like it. And that made me realize really quickly that just because something fits a pattern mechanically, you don't necessarily want to rush out and trade it. Now, what did I say earlier about the trend? The trend should be accelerating. So again, yes, it has fit the parameters of the pattern, but you can see that it's going mostly sideways. Never forget about the net price movement. Where is it today, and where was it going back a few weeks? Again, another one that's going sideways. This one looks a little bit better, but you can see it's lower than it was about a month and a half ago. So again, nothing there. This one's kind of in a longer term uptrend, but certainly not accelerating higher with a whole lot of vigor. Now, here's one that looks kind of interesting, and you can kind of see where I'm going with this. Now, keep in mind, when I did a stock selection course a few years back, it took me 14 hours to talk about everything I like in the charts. The good news is, if you can recognize a couple of these little easy things, you're well on your way. So in a case like this is pretty obvious. This stock is headed higher, and it's since pulled back to its EMA and looks poised to make a new leg higher. So I would put that one on your watch list. Now, continuing down the list, there's another one that's mostly sideways. Now, this one looks kind of interesting, TPTX. Notice that it's not only headed higher, but it has recently accelerated in its move, headed higher before it's pulled back to its EMA. Now, keep in mind, this scan was ran yesterday, and that's why it picked it up again today. We're using a list that was already ran, okay? So that one looks pretty good, so I put that on my watch list. And as we go through these, you'll kind of get the idea. So here's one Where is it now? Where was it several months ago? And you can see kind of just range bound sideways trading for the most part. Now let's keep going through these. Now this one looks okay. It has a very narrow range, so we need to find out, is it a foreign stock or what's going on, but it's certainly accelerating higher and certainly pulling back, so definitely worth coming back to as a potential setup. Now this one I like quite a bit. So notice that it was at a base for quite a while, and then out of that base it took off nicely. And as I often say, the bigger the base, the bigger the launch into space, and come to find out that's actually Ralph Acampora, who said that long before me. But anyway, nice little pullback to the moving average. So this is something that you probably want to go ahead and put on your watch list. And it'll be fun to follow up on these in upcoming shows. Now here's another one. Volatility, if you squint your eyes down here, a little bit on the low side, and this is why I wanted to sort by volatility. This would not be a stock I would consider. And the other thing too is go back several months, and where have we gone? We've gone nowhere. So scratch that one off of your list, or don't add it to your momentum list. Let's see if we can find something that looks a little bit more exciting. Well, there you go, right there. Here's a stock that took off rather nicely, and it got a little bit ahead of itself, but that's okay, and then it had a sharp retrace back to its moving average. Now, this stock may have topped out, but it looks like it has a potential to continue higher, and that's why the only way you would want to get in a stock like this would be that if it triggered an entry, maybe up here around 10 or so. Now, let's continue with these, and let's go through a few more of these and see what we could find. Now, initially it looked okay, but the volatility is a little low. And if you go back many months in here, you can see that once again, it's going quite a bit sideways. So again, even though it qualifies as a setup, doesn't mean that you necessarily want to rush out and take it. Now, this one looks okay. It's taken off fairly nicely and pulled back. So this would go on my watch list. It's not my favorite so far, but now this is one of my favorite setups, if not the favorite one so far. In fact, this one made what I call my Landry list for today. Notice that it accelerated higher and then it's pulled back to its EMA. Let's take a look at a few more and you'll get the idea. Now this one looks okay, but notice that it did pull all the way back to where it recently broke out from. So I'd put that on my momentum list, but I wouldn't rush out and trade it, at least not right away. Let's see if we could have some upside momentum. And here's the thing. I look at about 2,000 stocks every night, and the best stocks tend to jump out at you. Now, here's one that's okay, and the reason I say it's okay and not all over it is that I do like what it did here by blasting higher, but it did come all the way back into its prior base. And this one's okay, and because it didn't come all the way below the base, I would say okay. I'd put something like that on my momentum list. I just wouldn't rush out and trade it. So as you can see, in going through these, you can see some stocks or headed nicely higher, some accelerated higher, some have lost momentum. All of them fit the parameters of the setup, but it doesn't mean you want to rush out and trade all of them. And same thing I've been preaching the whole time. Now, I realize we're just kind of scratching the surface with this, but you get the idea. Just because something qualifies as a setup doesn't mean you want to rush out and trade it right away. Keep in mind that I look at a couple thousand stocks every day, so I have a little bit of a feel for it. But the good news is, over time, I think you too can get a feel for what I'm doing. And I think with just those few things I showed you a minute ago, such as the acceleration and the fact that the net price movement is not negative, it hasn't pulled back to the base, I think that'll help you to put you on the right track as far as the one pattern. Well, I'm out of time. If you guys have any follow-up questions, davelandry.com/contact. Again, we'll cover it here if time allows it. If not, I'll spend a lot more time on that in the weekend charts. You can register at my website, davelandry.com. If you want the slides and all the other goodies I mentioned earlier, davelandry.com/StockCharts. I want to thank everybody for watching, and may the trend be with you.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.